What if I told you that the world's most powerful empire has no flag, no army, and no borders, yet it controls every government, every corporation, and every paycheck on Earth? It doesn't rule through violence, it rules through debt. Every dollar in your wallet, every euro in your savings account, and every yen circulating through Tokyo, all trace back to a hidden network of power that quietly determines who gets rich, who goes broke, and who stays in control. This is not a conspiracy theory, it's the architecture of modern finance. And to understand how we got here, you need to follow the story of how money itself was captured, not by nations, but by an invisible empire built out of credit, contracts, and control. Welcome to the hidden empire that owns every dollar, euro, and yen. Once upon a time, money represented something tangible: gold, silver, land, labor. But as trade expanded across continents in the 17th and 18th centuries, merchants faced a problem. Moving physical gold was expensive, dangerous, and slow. The solution seemed harmless: let trusted bankers issue paper claims for gold stored in their vaults. These paper notes made trade efficient. They were backed by real assets, or so people believed. But behind closed doors, bankers discovered something extraordinary. If depositors rarely demanded all their gold back at once, they could issue more notes than gold actually existed. It was the birth of fractional reserve banking and the first spark of the empire we live under today. The moment money became a promise instead of a thing, power shifted. Bankers could now create money from nothing and charge interest on it. It wasn't just a clever accounting trick, it was a new economic weapon, one that governments would soon depend on. By the 1800s, industrial empires needed massive financing: railways, wars, colonies. But where would the money come from? Enter the private banking dynasties. Families like the Rothschilds, Barings, and later, Rockefellers, who mastered the art of lending to nations themselves. For the first time in history, governments became debtors to private interests. Wars were financed not by kings but by credit lines. Each time a cannon fired, interest accrued. Each time a peace treaty was signed, a repayment schedule began. The public celebrated victory, but the bankers owned the aftermath. In this new world, central banks emerged as the ultimate tool. Ostensibly, they were designed to stabilize economies, but their true function was to centralize money creation to make sure every nation's currency flowed through a single, controllable gate. The Bank of England in 1694 was the prototype. The model spread: France, Germany, and finally the United States. And when the Federal Reserve was quietly created in 1913 during a secret meeting on Jekyll Island, the last major piece of the empire clicked into place. Money was no longer issued by governments, it was borrowed into existence from private central banks. Every dollar, euro, and yen since then has been born as debt. World War I and II destroyed empires, but they also created an opportunity. After 1945, the world was in ruins. Nations needed credit to rebuild. And who had the credit? The bankers. In 1944, delegates from 44 nations gathered in a small town in New Hampshire, Bretton Woods. It was here the global financial system was re-engineered. The US dollar became the world's reserve currency, backed by gold. Every other currency would peg itself to the dollar. On paper, it looked like stability. In reality, it was consolidation, because whoever controls the world's reserve currency controls the world. And through the Federal Reserve and the Bank for International Settlements, the BIS, an invisible empire had now extended its reach across every border, every international transaction, every trade settlement, every cross-border loan flowed through this hidden architecture. The BIS, located in Basel, Switzerland, became the central bank of central banks. It was above the law, untaxed, untouchable, a private institution shaping monetary policy for the planet. By the late 1960s, cracks began to show. The US had printed more dollars than it had gold to back them. Foreign nations led by France started demanding real gold in exchange for paper dollars. The illusion was collapsing. So in 1971, President Richard Nixon made a decision that would rewrite the fate of every nation on Earth. He closed the gold window. From that day forward, the dollar was backed by nothing except trust and military might. The dollar remained the world's reserve currency, but now it was pure fiat. Money became a political instrument, not a store of value. And with that, the empire of debt became unstoppable. Governments could now borrow endlessly. Central banks could print endlessly. And the cycle of inflation, speculation, and dependency became self-reinforcing. The global economy had entered a post-gold era, where numbers on a screen, not resources, not production, defined wealth. From the 1980s onward, the empire expanded under new names: globalization, liberalization, and free markets. But behind the slogans was the same mechanism: debt equals control. When developing nations couldn't repay loans, the IMF and World Bank stepped in. In exchange for bailouts, they demanded austerity, privatization, and policy obedience. Hospitals closed, national resources were sold, entire economies were reshaped to serve creditors. The victims called it economic reform, but in truth, it was financial colonization. And it didn't stop at poor nations. Even rich countries became trapped in the web. The 2008 financial crisis exposed the system's core logic: when banks gamble and lose, governments bail them out using money borrowed from the same system that caused the crash. Citizens lose jobs, homes, and savings, yet the institutions that created the crisis grow even stronger. Each crisis tightens the grip, each bailout deepens the dependency. It's a feedback loop, one that always ends the same way. The debt expands, but ownership concentrates. After 2008, people began to question the system. Some turned to cryptocurrencies like Bitcoin, hoping to build a decentralized alternative. For a moment, it seemed like rebellion was possible. But the empire adapts. Central banks responded with quantitative easing, creating trillions in new money. The rich got richer, assets inflated, and the illusion of prosperity returned, temporarily. Today, the next evolution is unfolding. Central bank digital currencies, CBDCs. On the surface, they promise efficiency, speed, and inclusion. But in practice, they represent total control. With programmable money, every transaction can be tracked, approved, or denied. Taxation can be automated. Savings can be frozen, and dissent can be silenced, not by force, but by algorithm. It's the ultimate consolidation, a digital empire of money, monitored in real time, beyond public oversight. This isn't science fiction. It's already being tested in over 130 countries. And at the center of this transformation remain the same institutions, the central banks and the BIS, quietly guiding the rules of this new financial reality. Every generation believes their system is different, but the patterns never change. When debt grows faster than real productivity, collapse follows. When money creation becomes detached from value, corruption follows. And when too few control too much, history resets itself. Today, global debt has surpassed $315 trillion. More than 3 times the world's total GDP. That means for every $1 of real value, there are $3 of claims on it. It's a mathematical impossibility that can only end in devaluation, default, or redesign. Meanwhile, central banks are experimenting with new forms of control: digital IDs, linked to financial access, green credits tied to behavior, and AI algorithms that decide creditworthiness based on your digital footprint. The financial empire is no longer hidden behind marble buildings. It's woven into the code of the digital systems we depend on. We are living inside a new kind of matrix, one built not of pixels, but of promises. Narrator: so what does this story teach us? Takeaway 1. Money is not neutral. It's a system of power designed, modified, and weaponized by those who control its creation. Takeaway 2. Debt is the true currency of control. The more indebted a nation, a company, or a person becomes, the easier they are to steer. Takeaway 3. The empire evolves, but never disappears. Whether it's gold, paper, or digital tokens, the core design remains: centralized issuance, decentralized dependency. Empires of the past fell when people lost faith in their rulers. Today, faith isn't in kings, it's in currency. But what happens when that faith breaks, when citizens realize that their savings, pensions, and paychecks are simply numbers issued by a private network that can change the rules overnight? We're approaching a moment of reckoning, a point where the illusion of infinite debt collides with the limits of reality. The question is no longer what is money, it's who owns it, and what will they do next. Every empire hides behind a story. For centuries, we've been told that money is a tool of freedom, that it empowers us to build, trade, and grow. But behind that story lies another truth: that money itself has become the most powerful form of control ever invented. And the empire that owns every dollar, euro, and yen doesn't need to conquer nations because it already owns their balance sheets. So the next time you check your bank balance, ask yourself, is this wealth or is it someone else's promise? Because the answer to that question may decide how free our future truly is. If you found this story revealing, share it, subscribe, and stay curious. Because the more we understand the empire of money, the harder it becomes for it to rule in the shadows.